Time for this week's market segment, and we spoke with Jeff Peterson on Wednesday. Some of the big topics this week: President Trump's 2021 budget proposal has been released. We'll look at what changes are in it for ag. Plus, with the coronavirus and a wealth of export options in South America, will China be able to fulfill its part of the Phase 1 trade deal? We'll look at that. But we began our discussion with this week's WASDE report and how much of a market mover it was.
Yeah, it typically kind of served up a typical style February report as it turned out. It had the potential to have some fireworks in it because there was traders on both sides, bullish and bearish side, that were saying, are they going to factor in some of the Phase 1 trade deal information? And they factored in a little bit, I'd say, on the soybean side. They went ahead and raised the exports about 50 million bushels, brought us in at 425 million, which that was actually less than what we ended up seeing was expected at the 448 million and down from the 475 from where we would have been back in January. But on corn, it was pretty quiet. We went ahead and reduced exports, which that was pretty much, I think everybody was thinking that could happen, but maybe they'd wait a month. But then on top of that, they went ahead and bumped up the ethanol. But as we dig deeper into those ethanol numbers, and those two offset each other, I don't think it was so much that they thought we were going to produce more ethanol. What we're running into in many of these plants is that the test weight is lower on this corn. So it's taking, on average, we're seeing about 4% more corn to get the same amount yield on the ethanol side. So I think that kind of came into play there. Down the road, I think a few things. I'm a little concerned on that export number, though, to be honest with you, Troy, because right now we're up about 6% year to date. USDA thinks we're going to be up about 1.5%, but we're coming into a time when beans are going to be a lot cheaper coming out of South America. So I'm worried down the road that our ending stocks on beans might bump up a little bit unless China really steps in and buys.
And that leads right into the next question. I want to look at trade with China, then kind of how it relates or intertwines in with South America too. So China says that they're going to start buying more from us because of that trade deal. So, but then when you look at the prices of commodities in South America, I ask myself, okay, what's the path for China fulfilling their end of the agreement?
Yeah, that's the great question. That's the one that we every day honestly ask ourselves, because as we take a look at just some numbers we've seen, and it depends on who you listen to in regard to what the values are, but coming out of the Port of Paranagua versus the PNW Pacific Northwest, what we're seeing there is that those would be two kind of comparable locations to come out of Brazil and also the U.S. Some would say there's a 20-cent difference in price. Some would say it's as much as 52-cent difference in price, and that's that soybeans are cheaper out of Brazil. And keep in mind, they're on the very, very front end of their harvest, so their values will actually get cheaper yet than what we're seeing here in the U.S. Our U.S. basis values are very strong because there just isn't enough soybeans moving, so our spread between us just continues to increase. The other thing that's going on that there's not a lot of talk about is the spread between the U.S. dollar and the Brazilian real. And the Brazilian real is just tanking, the dollar's gaining steadily some strength. So as a result, that makes their beans even that much cheaper in relation to ours. So it makes it really hard to see when China is going to come in and want to start buying some of our beans.
And I've also seen you tweeting a lot about the coronavirus. Everybody at home, follow Jeff on Twitter. He's Jeff Peterson 01. So one thing I wonder about is, since China has been dealing with this outbreak, and maybe rightfully so, the responsibilities on fulfilling the Phase 1 trade deal don't become as much of a priority. Speak on that a little bit if you could.
Yeah, I think so. And there was some talk about that. So let's think about the provisions of the Phase 1 trade deal. Some of those provisions are, if either country, the U.S. or China, believes that the other party isn't holding up their end of the deal, there can be a consultation. And actually there was some talk a couple weeks ago that China wanted to talk about their ability to hold up their end of the Phase 1 trade deal. Now, it doesn't look like it ever made a formal request, but it looked like it got awfully close. One of the things I'm concerned about as it relates to whether or not they're able to buy or not, Troy, is whether or not they use that down the road to say, we really wanted to be able to hit our numbers, but we just couldn't because of the problems we ran in with that coronavirus. And I think that's a possibility down the road yet.
Okay, let's move over to corn for a second. So give us an idea as to what you see right now in terms of U.S. corn acreage, and along with that, price potential possibly.
Yeah, exactly. So as we dig into that, this is always that time of year where we start pulling our information together. We've got the Outlook meeting that comes out at the end of the month, February 21st and 22nd. That'll be a look at that information. In addition, you got the Planning Intentions Report on March 31st. But as we put our numbers together, last year there was about 18.2 million acres of prevent plant. And of that, we're kind of the opinion we think about 13 million, maybe 14 million of that will come back into production. And we're not sure on the breakdown, but our first stab at this looks like we'll take about 7 million to corn, about 16 or about 6 million acres over to soybeans. And if we do that, then we have to look at the yield. And the yield we're using is about a 178 yield. That's kind of where USDA came out in their baseline numbers back in November. If we end up doing that, that ends up giving us over 15 billion bushels of production. And we increase demand about 700 million, which that might be a little bit aggressive, but that still gives us almost 3 billion bushels of ending stocks, or over a 20.2% stocks to use. Now, I'm not saying prices are headed this direction right away, and there's some things in regard to weather that could cause us to go ahead and not get all those acres planted, but if that would happen, Troy, we'd be looking at coming this harvest, we'd be looking at $3 or below $3 on the futures for corn.
Okay, so let's get some insights into President Trump's 2021 budget proposal, and that was released a few days back. Agriculture could be seeing some cuts from that budget, right?
It does, and there was a number of items talked about. You know, you get SNAP included in that, but one of the areas that I took a look at was on the crop insurance side. And if you dig into that, the big deal in the crop insurance gets to be the subsidies. And as we, from the marketing side, look at how do we set up a good marketing plan, we always want crop insurance there, and we want it strong to give us that foundation to be comfortable to make those pre-harvest sales. What's being talked about, though, in the budget, though, would be about a $25 billion reduction over 10 years. That'd be about a $2.5 billion per year reduction. You know, I hope that doesn't get voted on, doesn't get put through that way, because I really want to see that strong safety net that we have through basically the crop insurance stay there.
Yeah, and as far as crop insurance, now's a good time of year to make sure you got everything squared away with that, right?
It really is. You know, the March 15th deadline will be coming up, and what you're going to end up having to do is make sure you're watching along. The thing about that is that the spring price is now calculating. So on corn, what we're doing is we're working off of the February, during the month of February, the December futures for corn, and over on soybeans, it's working on establishing that base price through February based off the November futures price.